Is the housing market flashing a warning signal? Hey everybody, my name is JJ. You're watching Bull Boom Bear Bust. It is Tuesday, August 24th, 2021. Well, as most of you know, if you've been on this channel, we've been keeping a very close eye on the housing market. Now, some say as the housing market goes, the economy goes, the tail that wags the dog. Others say no, we're going to start seeing other areas unfold first before housing. Well, we know with all the propping and shenanigans happening now, and all these laws, that the housing market is nowhere near real value. And when I say real value, I mean you have to take out the fractional lending, you have to take out the eviction moratoriums, the foreclosure prevention. I put all those under the category of shenanigans, including the fractional lending. That's probably the biggest one, fractional lending. But also institutions buying and buying on leverage, just like they place bets on leverage, purchasing real estate with borrowed money. And we know that corporations, big hedge funds and the such, back in the second quarter bought the most homes during that quarter versus any other quarter in history of the United States. But what's happening here, let's take a look at a chart. This is the inventory of homes on the market. And this just came out within 30 days. I'm not sure exactly, but it's pretty recent, or the most recent one as far as the Fred data. And we did see the big drop in supply of homes during the sickness shutdowns. And we've been seeing a surge, and now we're the highest that we've been for inventory since about April of 2020. So we're at about about 16 months, a 16-month high in inventory. So is this a warning sign, right? It was a huge drop, but now we're seeing a huge surge. Well, some would say yes, that's one of the biggest rises in inventory that we've ever seen. Even if you go back to this 10-year chart, there's no other rise that was as rapid and as steep as this rise in inventory. But from a historical perspective, let's go out to a longer term here. We're still right around mid-range. And actually, when you look at a balanced market, we're still not balanced. It's still a seller's market. So a 6-month supply of homes is basically considered to be a sign of a balanced market. That means you have enough supply to meet the demand, enough homes for sale to match the number of buyers. But right now, instead of being at 6-month supply, we're only at about a 2.6-month supply of homes. So as you can see, this is not being resolved. The supply issue is not being resolved. We had some correction in lumber prices. That's going to help some eventually, but it's not going to be that quickly as far as getting new homes built. With the builders now, being more optimistic about the lower prices. But wow, I mean, you talk about a bubble. I mean, this market would crater like no other time in history if it weren't for all of the propping and some of the things we mentioned earlier, the mortgage-backed securities that allow banks. So it's a way of, a lot of people would call it a backdoor bailout, but it's continuous bailout. And let's look at the home ownership rate chart. This is the most recent. It's only updated quarterly, but as you can see, the rate of home ownership has been dropping. What does that mean? More people selling to institutions or landlords, people buying second, third, and investment homes. And there's just so many things that would need to be changed or reversed in order to bring prices back in line with what people can actually afford. And it's no coincidence, and I've said this before, it's no coincidence that you see debt increase, both consumer debt and the Fed balance sheet. Debt increases when asset prices increase. Right? So when banks start getting more strict on the lending, when institutions quit coming in, also if mortgage rates rise, it's going to take a lot of things to really reverse this market. Or there could be some bigger thing happen where, the entire system freezes up. And we've, talked about some possibilities right now, the social, economic issues here, the society issues rather. There is a lot of divisiveness in this country right now, and there's a few big risky areas out there. The food supply is a big concern for me. We're seeing the big surge in food prices, and not just food, but autos and all the different rising priced areas that we talk about here. But food, that's got to be the scariest one. You combine the fires, the floods, the supply chain disruptions, the labor shortage is part of the supply chain. So there's a lot of things concerning me right now on our food supply. And when people start going hungry for just a day or two, you're going to start to see a massive, massive surge in unrest. Now, what else could it be? I think there could be some other hot button topic that comes up or hot button issue that comes up that people might start freaking out over. Just take a look at what's unfolded here in the past 18 months on top of the sickness issue. So just look at the last couple years and compare it to history or compare it to your life so far. What we're seeing now is pretty insane times, and these markets are pumped up like no other. Nobody knows what the end game is or the end date. If there is an end date, I mean, who knows? But what you have to do is try to benefit from these markets, from these rising prices. Thing I'm still accumulating is silver. Now's a good time to pick up silver, people. It's less than half of what it was when it hit the all-time high back in the 80s. I think about that, half of what it was back in the 80s, like 40 years ago. Right, that is insane. So something's going on there, and I think silver's still going to have its day. In the meantime, I'm just holding and buying more. You've got to be patient to be able to buy and sell at the right times. You don't want to freak out. You don't want to panic. All right, but let's go over here. This is a CNBC article. Market may be in the biggest bubble of my career. All-star investor Richard Bernstein warns. All right, so a lot of people would look at this and say, well, that's Captain Obvious right there. We know it's the biggest bubble. And the thing about it is we've been hearing this for years out of many other well-known investors and business people. All right, so even the best, most experienced economists and business people still they've been calling a bubble for years. Let's say since 2017 is when I first started hearing the everything bubble. And here we are 4 years later. It's still the everything bubble. It's still getting bigger. So even the experts are scratching their heads on this one, people. So you let me know what you think, please, about these. And the biggest rise as far as the rapid and the steepness of the rise that we've seen in about 10 years. So is it a turning point, or is the money printing just going to be too much? It's just going to be more mortgage debt, more Fed backing of the markets, the Fed buying everything, propping up the market. No end to the forbearances and the moratoriums. What a situation, folks. It's a mess. You let me know. And I'll leave you with this. We're going to change it up a little bit. Someone put this down in comments, and I'm not sure where he got the quote from. Get in the best shape of your life spiritually, emotionally, and physically. All right, that was the end of that quote. You're going to need it. I'm going to need it. We're all going to need it. Stay safe, people. Bye for now. Peace.